Hey guys, Drew Harlow here with Nine Leadership. Stay tuned for our interview with Ryan Rushe, financial planner and advisor with Prudential. Hope you guys enjoy it. All right, Ryan, thanks so much for joining me, man. Appreciate you taking the time to talk to me about this whole situation right now. It's kind of crazy. So, what for everybody out there watching? Tell me what you do and what kind of clients you see right now.
Sure, definitely. And thanks for having me out. Doing a lot of conversations, talking to a lot of people right now, just crazy times, reassuring them and letting know that things are going to be okay. Myself, I'm a financial planner and investment advisor. So I work with my clients to have a game plan in place. So, whether we're planning till tomorrow or till age 100 or any time in between, we make sure that there's a step-by-step action plan to get from where they are now to whatever goals and whatever they want to accomplish down the road. So that's what I do in my day-to-day as a financial planner and advisor. What I'm seeing right now with my clients, I'm probably lucky side, relatively speaking overall here, because a lot of people I'm working with are younger professionals, a lot of qualified money that they won't hopefully be touching until 59 and a half anyway. So we have time to weather this storm. And taking a financial planning perspective, one of the first cornerstones of financial planning is focusing on your cash flows and budget. So, we want to make sure that your spending's in check and you do have an emergency savings account, whether it's 3 months, 6 months, 12 months. And, that doesn't make anything easier now. It's, definitely very difficult times, but if you do have those emergency savings in place, you're feeling a little bit less stressed than a majority of the people out there right now, unfortunately. So that's what I'm seeing from my clients is just on the front end, having that preparedness and having a plan in place, and just being reassured more so than most people during this time.
Sure. And then for clients that are a little older, I mean, what are some things that you're seeing on that end in terms of the folks who are kind of, in their 40s or 50s, that kind of thing?
Sure, definitely. And, it's definitely a scarier time if you're, recently retired or you got on the short-term horizon in the next few years. It's like 2008 all over again, where your savings and retirement accounts could have been cut in half. And now you just got to regroup and replan. And, maybe some people got scared and pulled everything out, or maybe others just have the mentality, I'm going down with the ship. It's the time to make sure you're talking to a professional or, your planner, your advisor to reassess and, see if there are any changes to make to your overall plan and make sure that you can, mitigate any potential disasters that are happening right now to, your assets and your savings.
Cool. Thanks, man.
Mm-hmm.
So this obviously is a crazy unplanned, you can't plan for something like this right now, right? It's happening.
No.
And, there've been other outbreaks in the past. How does this coronavirus, COVID-19 situation compare to past outbreaks we've had in the history of the U.S.?
Sure. So this is what is called a black swan event, something that can't be modeled out. There's no history for it, similar to a 9/11 type situation. The money managers, they're able to model out to, a very accurate percentage of just how markets react historically and, what to expect in the future and how to take risk off the table when they, may see situations arise or even things that are unexpected. But relative to past outbreaks, here's the last few that we've dealt with, going back to SARS, swine flu, MERS was a type of coronavirus, and even Ebola and Zika. Granted, this chart, the data is about a month old at this point. This comes from the CDC itself.
Mm-hmm.
But where we are relative to 2016 with the new administration, the market has not dropped below the Ebola or Zika level. So overall, relatively speaking, outbreaks have occurred, and this, SARS tied in a little bit with the dot-com bubble, and the swine flu tied in a little bit with the real estate market. But the economy, the market just keeps chugging along here.
So one thing to notice about that chart, when looking at that chart, it's important to notice that after every one of those viruses you mentioned, the market rebounded pretty significantly, right?
Yes, and even more specifically, historically speaking, whenever the market drops 15% in the following 12 months, there is typically a 50% bounce back. So what that tells us is you don't want to, be pulling out of the market and being scared, putting your money under the mattress. Maybe you want to scale back your risk a little bit or get a little more comfortable until things calm down. But ultimately, you still want to be in the market so you can catch that comeback and be rewarded, come out on the other end stronger when this does, kind of even out and get back to business as usual. This situation, the quarantine, is very different from previous market crashes because essentially it's just a pause. Everything stopped. People can't work or travel or do business. It was different from the financial crash where we had a systematic failure with the banking and lending industries.
So what opportunities are you seeing in the market right now for folks who do want to get back in there and not be scared about the future of the market?
Sure, definitely. Well, dollar cost averaging is a great strategy if that's something you already have implemented into your financial plan or your savings strategy. And what that is on a monthly basis, you have a designated amount in your budget where, whether it's a couple $100, you're putting it into the market each and every month consistently. And it doesn't matter if the market's up or down, you're not overthinking it, you're not trying to time the market, you're just continually, building up a position and accumulating your assets. So if you have a strategy, don't stop it. I've been trying to talk a lot of people out of that. Obviously, if you're nervous with cash flow and you need to pay bills, that's a different situation. But just stopping putting money in the market because the market's going down, everything's on discount, on sale, 25, 30% from where it was a month ago, and not really a fundamental reason for it. So, it's just an opportunity to get good value if, you are able to put more money into the market and have those strategies in place. But even outside of the market, I was talking to one of my loan officer friends the last couple of days, and he's still telling me if you have a mortgage and you're paying over 4%, there's opportunities for you to, save money with the refinance. I have two clients recently who I saw those opportunities, let them know about it. They refinanced. And what's nice about that, especially times like this from a cash flow perspective, they're skipping 2 mortgage payments. They're getting escrows returned to them. So that's significant thousands of dollars that they're getting back as far as cash flow, when times are tight right now. And then going forward, their future mortgage payments are saving $200, $300, $400 a month. So, they were in a situation to take advantage of that. They saw the opportunity. And, I would encourage everyone, if you have a house and a mortgage and you're over 4%, talk to your loan officer. I know, Drew, some good loan officers as well, but, that might be opportunity to give you a little boost in cash flow. Taxes, the filing date got moved back from April 15th to now it's July 15th. So that gives you extra time to make contributions for your 2019 retirement accounts, whether it's an IRA or a Roth IRA. You can still get up to $6,000 into those accounts, start growing that money tax deferred. And that's 2 extra months to be able to put more money and, hopefully maximize those contributions in retirement accounts. Finally, just if you had money on the sidelines, again, everything is a great value and, on discount right now because of all the market turmoil. So those are some opportunities that I'm seeing specifically. And then also, if you're working with a financial planner, talk to them and just kind of do a review of your budget and, where you can tighten up things if you're concerned from a cash flow standpoint, or just have review of other, insurance premiums, other opportunities to bundle, lower your payments, call your cable company, threaten to drop your Sirius. There's lots of options out there, but, just talk to somebody because, you don't know what you don't know, and you might not see any of these opportunities. And so, it's good to have someone to bounce ideas off of and look for ways to just help that cash flow.
Yeah. Awesome, man. So you mentioned financial planners, and obviously you are one. But what's a good way to look for a good financial planner? I mean, a lot of people are afraid of financial planners. They've had some bad experiences. I know you're a fiduciary. Do you want to explain a little bit about what that is, what that means, what the difference between a financial planner who is a fiduciary versus one who's not?
Yes. So fiduciary means that I am legally obligated to work for the clients in a planning relationship, advisory relationship. So my parent company, it's Prudential, The Rock, known for insurance and recently more so comprehensive financial planning. But just because I work for Prudential doesn't mean I only, sell Prudential products. Uh, as a fiduciary, you basically hire me to be your personal CFO. And if you need any type of insurance, we go out and talk to a bunch of different carriers, and whether it's a specific feature or price point, we find the best options, and whatever makes sense and works for you, that's what we do. And same from an investment perspective, we'll go and see what money managers are out there, what portfolios they have, what makes sense as far as your risk tolerance is concerned, and who you match up with from a goal perspective, from a timeline perspective, from a price point and fee perspective, and whatever makes the most sense, we go with that. So that's what the fiduciary role is. You're not just working for a company and selling a specific type of product. You're working for the client or the business owner.
Great. That's good to know, man, because I know like I said, a lot of people are nervous about talking to financial planners. They've heard horror stories, those kind of things.
Mm-hmm.
And it's good to know that there's a distinction out there.
Yes, and along with the fiduciary status, we're held to like the same privacy and HIPAA laws as attorneys and doctors and things like that, and just to kind of equate ourselves to those type of professions. If you have some type of medical ailment, you're probably asking around to your friends or people that you trust. Who's a good person to talk to, or who can I get introduced to? It's not one of those situations where you want to go and pick a name out of a phone book or go on Craigslist or something. You want more of that trusted introduction, someone who's kind of been there, done that, and can vouch for whoever you might potentially be doing business with. So I would say your inner circle or professionals you work with, those would probably be your first starting point for a need. I need to talk to somebody about all my old retirement accounts, and I really need to pay attention to them now, put them all in one place, especially during this time, and have better control over it. Who should I talk to? Or
that sounds oddly familiar, that story.
Or I got a wife and a couple kids, and it's time to do some adulting. I probably need some insurance, and put some saving strategies in place. I got to figure out college, and eventually I'd like to retire. And who can I talk to? Have you ever worked? Who do you trust? And that's the people I like to work with are the ones that refer to me, because there's already that kind of certain rapport, or I know I can get along with them because I get along with whoever was the friend or family member that introduced them to me. I'm sure we got a very similar mindset as far as values, what's important to us, family wise, that sort of thing. So those are my favorite types of introductions and people to work with. At the end of the day, I do love the work I do, and most of that comes back to the people and the relationships that have formed over my years doing this.
That's awesome, man. I think if you're looking for financial advice on Craigslist, you have bigger problems, but that's my opinion.
Sure. Well, we got the free section, so find anything there. Anyone that wants to talk with me, happy, especially during these times, doing a lot of virtual meetings. And for me, just as a planner, what's important to me is people being educated and having the tools and the resources to be in a better place. And just kind of a filtering factor for me is if different times, but if you were willing to take an hour out of your time and come meet me during the workday in my office to talk about your financial future, you're the type of person that I want to work with and help you get in a better place. And now we're in a different type of environment, and everything's virtual type meetings here. But if anybody just wants to talk or vent, or just have some more questions, want a little bit more in-depth details or answers, anything like that, I'm happy to spend 30 minutes with anybody, have one of these virtual video conferences, and just share whatever information I have that that you want to learn about.
Well, Ryan, thanks a lot, man. I mean, before we end the broadcast, do you have any last minute thoughts you want to leave anyone with?
Yeah, just in times like this, remember your process, remember your strategy. We're talking about your family's financial future here, and investing and everything can be very emotional, and just want to take a step back and make sure you're not making any irrational decisions, and ask yourself, has anything really changed with your long-term goals, what you're trying to accomplish? And if the answer is no, then just stay the course. If the answer is yes, then talk to someone, talk to me, talk to someone who does financial planning, financial advising. It hasn't been fun, but we're all in this together and we'll get through it together. So I would just say, stick to your plan. And if you need someone to talk to, there's plenty of people here who can lend an ear and help get you through this.
Awesome, man. I think that's a really good point. I mean, the whole idea of taking the emotions out of it, because at the end of the day, it's numbers. It's not emotions. So, well, thanks so much, man. I'm going to leave your contact information in the description down below, so anyone who wants to reach out to you can feel free to do so. But thank you again for taking your time, and we'll talk again soon, man.
Well, really appreciate it. Thank you for inviting me out to spend a little time. Whoever gets a chance to check out this broadcast here, and best wishes to yourself and your family. Stay safe and healthy, Drew. Thank you again.
Thanks, man. You too.
All right, take care.
Well, that was our interview with Ryan Rushe, Prudential advisor and financial planner. Please feel free to reach out to Ryan if you have any questions about finances, the stock market, or investments at all. His information is going to be in the description below. If you like this video, please leave a comment, hit the like button, and don't forget to subscribe if you liked our videos as a whole, and ring the bell if you want to make sure that you're notified when we publish new videos. We're going to be doing more of these interview series for as long as this COVID thing is going on. We try to make sure everyone has peace of mind about any questions they might have. If there are folks who you want us to talk to and find out information for you, please feel free to reach out to me directly or leave a comment below and I'll do my best. Thanks a lot, guys. Take care. Stay well.